let's do a little market update. And I'll start by asking a simple question. What's the big story in real estate over the last few years? What happened? Yeah, California lost 500,000 people. Texas gained 500,000 people. Where'd they go? You got that right. That's correct. But what's the big story? What changed over the last few years in real estate? Interest rates. Okay, what happened to interest rates? They went up. Okay, so interest rates went up. They're different than they were. So let's do a poll of the audience. No right, no wrong. Let's try to get everybody to participate. I'm going to give you two options. You need to pick one of the two. You can't be wrong. It's just your opinion. Who thinks interest rates are kind of high right now? Who thinks interest rates are high right now? Who thinks interest rates are low right now? Okay, I'm not getting a lot of votes here. So you got 100% participation. Who thinks interest rates are high right now? Who thinks interest rates are low right now? Okay, we got a lot of highs and a couple lows. Okay, my opinion is interest rates are normal right now. Okay, I've been buying rental properties for 21 years, and most of my portfolio have most of my rental properties have interest rates 6.5%, 7%, which by all historical standards are normal. That's normal, folks. Now, a few years ago, interest rates got down to 3%. Before that, prior to a few years ago, when before that did they also get down to 3%? 2008, no. The answer? Never. Never. Never in your lifetime, your parents' lifetime, your grandparents' lifetime, your great-great-great-great-grandparents' lifetime. It never happened before. So when's it going to happen again, folks? My guess, never. I don't know. I can't predict the future. But my guess, never. In your lifetime, your kid's lifetime, your great-great-great-great-grandkid's lifetime. And what would have to happen to make that happen again? You're going to be more concerned about the zombie apocalypse than you are about interest rates, okay? Like, I don't know, but I don't see it ever again. So it changed for sure. It went from abnormal to normal. It went from normal to abnormal back to normal. So let's talk about that. Certainly they were different. Now, personally, I'm going to tell you, I love normal. I hate abnormal. I do both residential and I do commercial. And with commercial flips, syndications, are typically 5-year deals. So when you buy commercial property, and commercial loans are like 5-year loans, they're not 30-year mortgages like residential. Commercials are like 5-year, right? So when you do a commercial loan and a commercial syndications, typically you're going to resell, refinance every 5 years, right? Now, if you bought a property, and here's the problem, all these people were buying these multifamily properties, apartment buildings. And a few years ago, the market was on fire, so people are paying top dollar for these apartment buildings, and they're getting them financed with 3% mortgages. And you know what? Even if you paid top dollar, right, with a 3% mortgage, you could collect enough rent to pay the mortgage. Okay, but now those loans are all coming due. And you can't get a 3% mortgage because that's not normal, right? Loans are normal again. And if you resell the property at the same price you bought it for, well, at 7% mortgage, you're not collecting enough rent to pay the mortgage. So these properties have problems, okay? I don't like problems. So I'm not interested a few years ago in buying commercial. Now is when you want to buy commercial. Now, not 3 years ago, now. Because the question to ask now is, in 5 years, what do you think? Will interest rates be higher, lower, or probably about the same? I don't know. I'd guess about the same, maybe a little lower, okay? But they're not going to be 3%. That I wouldn't bet on. I would never invest in something that's never happened before in the history of the world and expect that to continue to happen. That I don't think was a safe or smart bet. But interest rates are certainly higher than they used to be. And the question next then is, when interest rates go up, what does that do to home prices? What do you think? When interest rates go up, what happens to home prices? Who thinks when interest rates go up, home prices go down? Who thinks when interest rates go up, home prices go up? Who thinks when interest rates go up, prices go down? Okay, we got some downs and some ups, and a bunch of you are scared to vote. I'm going to tell you what happens when interest rates go up. Home prices go up and down. They go like this, okay? Here's the thing about home prices. Home prices do not care about interest rates. Home prices care about two things, supply and demand. It's pure supply and demand. It's all it is, supply and demand. So in as much as interest rates affect supply and demand, yeah, they will affect home prices. Now, certainly when interest rates go up, mortgages are more expensive, which means fewer people can afford them, which means demand goes down. So in that way, interest rates go up, they push home prices down. But there are offsets. Let's talk about some of the offsets. Why did they raise interest rates? To battle what? Inflation. What is inflation? You know, they talk about inflation. Whenever they talk about inflation, they talk about it like it's this bad thing. Inflation bad. We got to whip inflation, get inflation under control. Right? Now, personally, I disagree. I love inflation. I really do. I adore inflation. I just have another name for it. I call it appreciation. It's the same thing, guys. When money becomes worth less, what becomes worth more? Assets. Things like gold, things like real estate. Who's owned a house for the last 3 years? Nice. You're a lot richer than you were 3 years ago. Congratulations. What if you had 20? What if you had 100? What if you had 200? You can't go back. You can go anything you want going forward, right? So yeah, if you're somebody like me, right, who's got all of their wealth in real estate, then you go to bed at night hoping for more inflation, right? Because that makes the assets go up. Okay, now, so that's an offset. What's another offset? Normally, when you look at the market, 2/3 of the houses for sale are resale, 1/3 are new construction. Right now it's inverted. Right now it's 2/3 new construction, 1/3 resale. People are not selling their house. Why are they not selling their house? Because they got a 3% mortgage and they don't want to give it up. Normally, right now, people should say, the economy is not bad, we got a job, honey, let's get a bigger, nicer house. But they're not. They're staying put because they got a 3% mortgage and they don't want to let it go. So all of that supply is being held off the market. And when you have less supply, what does that do to home prices? Pushing them up. So we had things pushing down, but we got other things pushing up. And when you put all that together, I'm going to tell you the market is flat. So this is an interesting chart I like to show people. This is interest rates versus home prices going all the way back to 1970. From 1970 to 1981, interest rates on mortgages got all the way up to 18%. So if you're complaining about a 6.5% interest rate, well, how about 18%, guys? Because that's what they had in 1981. But what was interesting is when interest rates went up, what happened to home prices? They actually went up. And when interest rates came down, what happened to home prices? They went up some more. And when interest rates went up and down, up and down, up and down, you know what happened to home prices? They kept going up. Now, there have been bubbles. There's a big bubble. That was that 2008, 9, 10 bubble. Remember that bubble? Been a lot of little bubbles. There's all kinds of little bubbles and big bubbles. But over time, yeah, it's not as simple as like there's a direct correlation between interest rates and home prices. So, what's going on in the marketplace? Let me give you some data. Texas. The average price house in the state of Texas is $422,000. Up a little bit, 3.3% year over year. Median price, $335,000, up 1.5%. Now, the most important number on this slide is this one right here. If you want one data point that tells you what's going on in the marketplace, ask for months of inventory. What is months of inventory? Months of inventory is this. If you stopped adding any more houses for sale, we got all these houses for sale in the MLS, what if you just stopped letting anybody else put their house for sale? Let's just sell what we have until we're out. How long would it last? The answer, 4.8 months, which is also the average amount of time it takes to sell one house. Now, average, some houses faster, some houses slower, right? But the average is 4.8. That's months of inventory. Now, put it in perspective. They say if there's less than 6 months of inventory, you have a seller's market. If there's more than 6 months of inventory, you have a buyer's market. If there's right around 6 months of inventory, you have a neutral market. Notice we are still in a seller's market. People are like, the market's down. No, it's actually still a seller's market. Now, it's not as strong as it was a year ago. A year ago, we had a hot seller's market, 3.8 months. This year, we have 4.8 months. Now, we have a lukewarm seller's market, but it's still a seller's market. Now, some more perspective. 2021, prices in Texas went up 18% in 1 year. 22, they went up another 10.7% in 1 year. And then 2023, flat. So the market went way up, went up some more, and then it just flattened out. And it's been bouncing right along flat for about a year. Actually, just several months ago, it's starting to tick up a little more. So if you're waiting for some big correction, that was probably it. Wasn't all that excitement, right? The interest rates went up, right? So the demand went down and the supply went down and prices stayed flat. That's what happened. So Houston, average price 423, up 5.2%. I think that's the hottest market. Median price 335, up 2.7%. Closed sales is up for the first time in a year, 4.4 months of inventory. Not as good as it was a year ago, it was 3.5 a year ago. Lease prices are up a little bit. When lease prices are up, that's commercial. Does that mean the apartment buildings are full or they're empty? It means they're full. When prices are up, it means they're full, right? So even the apartment buildings are full. Why? Because last year California lost 500,000 people, Texas gained 500,000 people. Okay, and then there's 5 other million people that we don't know where they went, but some of them are here too, right? Houston. 2021, prices went up 16% in 1 year. 2022, prices went up 10%. 2023, just like Texas, flat, flat, flat. The big D, Dallas-Fort Worth. The average price house in Dallas, $509,000. Wow, average. Second most expensive city in Texas. Up 3%. Median price, $400K, up 1%. Closed sales is up a little bit. Months of inventory, 4 months. I think Dallas is the hottest market in terms of months of inventory, 4 months of inventory. Last year it was also the hottest, 3 months of inventory. Lease price is down 1%, basically flat. So what happened in Dallas? 2021, up 20% in 1 year. 2022, up another 15% in 1 year. 2023, flat. Well, up 1%, which is flat. And Dallas, for some reason, I don't know why, it has always been the bellwether of Texas. If you kind of want to know where things are going, look at Dallas first. It's always the first to go down, first to go up, first to do whatever. It's always been the one that leads all the other cities. I don't know why. Okay, Austin. Austin's an outlier, and I'll tell you why in a minute. But the average price house in Austin is $560,000, average. Up 1%. Median price, $429,500, down 1.4%. Yeah, $560 average price. Isn't that crazy? We did a little research trying to understand this. Turns out Austin, where did the name come from? It's actually Latin for San Francisco. Yeah. Elon Musk moved to Austin. Meta came to Austin. Apple, Samsung, you know, all these high-tech companies, and they brought all their high-tech engineers. And a lot of six-figure people, right? 4.4 months of inventory, it's getting pretty good. It's picked up, but I'll show you the outlier. Here's the outlier. 2021 was an outlier. In 2021 in Austin, Texas, prices went up 29% in 1 year. In 2021 in Austin, Texas, there was 0.4 months of inventory, less than 2 weeks of total inventory. In 2021 in Austin, Texas, you'd put a house on the market, you get 11 offers in a weekend. 1 would win, 10 would lose. So the 10 losers, they'd put an offer on a second house, they got 11 offers on a weekend. 1 would win, 10 would lose. And this happened over and over again until people started screaming at their realtors. I need a place to live. You're giving me bad advice. What do you have to do to buy a house around here? And in that very unnormal year of 2021 in Austin, Texas, in that unnormal market, it became normal for people to buy houses 5 to 10% above appraised value. Above appraised value. Now, by the way, the bank will not let you buy a house above appraised value. The total down payment and the total loan cannot exceed by $1 the appraised value. If you really want to buy a house above appraised value, you put down your down payment, you get the loan, and then you take a big sack of dough and you lay it on top of that after it's all done. And in 2021 in Austin, Texas, that became normal. And people were buying houses 5 to 10% over the appraised value. 2022, it didn't get any better, up another 10%, and then 2023 down 8%. So most of Texas shot up 30% and flattened out. Austin went up 40%, came down 10%, and flattened out. What's the difference? 1 year was the difference. You know, bought a house 3 years ago, you made 30%. Congratulations. You bought a house a year ago, you lost 8%. So that's perspective. San Antonio, the most affordable major city. Average price $372 flat. Median price $309, down 2%, basically flat. 5 months of inventory. I think that's the slowest major city in Texas. 2021 prices went up 16%. 2022 up 12%. 2023 flat, down 2%, which is flat. All right, what's driving the market? Well, the economy has some impact. Real estate doesn't really actually care that much about the economy. During the Great Depression, interestingly enough, prices went down a whopping 6%. Not much. During the Great Pandemic, another 1 in a 100-year thing, prices went up 30%. It's not the economy, not directly the economy, but it is indirectly. If the economy is doing well, then people are a little more likely to buy real estate. Like consumer confidence, they rate that on a scale of 0 to 200. If people score it over 100, they're confident. Less than 100, they're scared. Right now, we're at 103, right over the middle, so they're a little confident. We have good, solid employment. Anything under 5% is full employment. Texas has full employment. We're growing jobs in Texas. Stock market, again, stock market doesn't affect real estate directly, but it does indirectly. If people look at their 401k and it went up, they're like, oh, we're richer, so we're more comfortable buying a house. And business growth is good. Affordability, interest rates. So these are pushing up. Interest rates pushing down. Interest rates are higher, right? So that's making houses less affordable. Home price trajectory is flat. It's not up, not down, so it's yellow because it's flat. Not pushing up, not pushing down. It's flat. Supply, active listings, flat. We are adding more, but just keeping up with demand. Months of inventory is pretty good. We have less than 6 months of inventory, so we're still in a seller's market. Housing permits trajectory, you were not building enough houses, right? People keep moving here, people keep having babies, and we're not building enough houses. Construction labor growth, this is a problem. Contractors are getting old and dying. The average general contractor is like 58 years old. And they keep getting older because kids are not becoming contractors. So if you have a teenager, here's some advice. Don't send them to college. Buy them a hammer. They will make way more money. Do you know how many multi-millionaire plumbers I know? Plumbers make more money than surgeons, guys. I'm serious. Plumbers make more money than surgeons, and they don't have student debt. And they can start in a year and not in like 12 years. I mean, it's crazy. It is really crazy. Yeah, so general contractors are making hundreds of thousands of dollars. They don't have to work for some jerk. They make their own hours. They have a great life. Get your kid a hammer, okay? Housing demand, closed sales trajectories down a little, but turning. Pending sales trajectory flat. Migration, now this bullet should be triple size. This is really not all these things are the same. This is the big one. Migration is the ratio of people moving in versus people moving out. That's direct impact on demand. Like I said, 500,000 people moved to Texas, and another 5 million people came over here, and a bunch of them are here too. And they all need a place to live. That's what it all comes down to. And so we have huge migration. And we have a problem in Texas. We have a problem in the country. Do you know we're in the middle of a housing shortage? Who's heard of this? We're in the middle of a housing shortage. Yeah, we have 6 million fewer houses than we need for the number of people that need a place to live. And that's just the people we know about that need a place to live. So when you have this huge shortage of houses, what does that do to home prices? Pushing up. Wild cards. I think there was an election, a couple of wars going on. What's going to happen next with interest rates? I don't know. So I don't know, guys. There's your data. Let's do a vote. No right, no wrong, just opinion. Who thinks going forward prices are probably going to go up? Who thinks houses are going to go up? Who thinks houses are going to go down? Okay. Most of you think up. Okay. I'll give you our forecast. That was probably the bottom of the market. It didn't do much. The bottom was flat. Several months ago, it started to come up. Not a lot. We expect interest rates will probably drop one more time by the end of the year. So we're starting to get a little bit of juice. The only thing really kind of hold us back a little bit is interest rates, and those are starting to get juiced a little bit, not a lot. Sales are starting to rebound a little bit. We expect sales to be up by about 2% by the end of the year. Prices will be up about 2% by the end of the year. So our forecast is it's going to go up a tiny bit. We don't expect it to go up a lot. We don't expect it to go down a lot. We expect it to go up a little. And by the way, we have been doing a forecast for 20 years. And our forecasts are usually spot on. And it's not because like we're super geniuses or something. And by the way, this is not my forecast. I just report the forecast. The reason, though, the forecasts are usually spot on is because it's not that hard. Right? Predicting the economy is really hard. Predicting the stock market is impossible. Predicting real estate, not that hard. And the reason it's not that hard is just supply and demand. And we know everything. We know exactly how many houses we have. We know. We know how many housing permits have been issued. We know how many houses we're building. We know how many people live here. We know about how many people are having babies, about how many people are dying, about how many people are going to be living here. We know how many houses we have. We know how many houses we need. We know everything. There's just a couple things we don't know. We don't know exactly what interest rates are going to be. We know about what interest rates are going to be. But all the things that drive the market are pretty well known. And that's why there's nothing huge on the horizon that would cause things to change dramatically in any direction. So that is our market update. Was that helpful for you guys? Great. You can get copies of this on our social media. Before we wrap up, any questions? Any questions? More questions? About anything? Yeah? Yeah? What was your question? Yeah. Yeah. What's the difference between that and a short sale? Okay, a short sale is a transaction where somebody owes, let's say, $200,000 on their mortgage, and maybe they're $20,000 behind, so they owe $220,000 to the bank. But for whatever reason, the house is only worth $170. Maybe the market's gone down or whatever. So they owe like $220. The house is only worth $170. Well, if they don't pay their mortgage, obviously the bank's going to foreclose. But the bank's going to take a hit because it's not even worth what is owed on it anymore. So you can go to the bank and you can say, hey, bank, I know they owe you $220, but let's be honest, this thing's only worth $170. Tell you what, I'll give you $150 if you just let it go. And a lot of times they'll take it because it costs them about 50% of their note to do a foreclosure. So they're going to lose a fortune no matter what happens. They just may lose less money faster if they let it go for a short payoff. So a short sale means short payoff. They're allowing you to buy it for less than what's owed by releasing the lien with a short payoff. Okay? Now that strategy had nothing to do with short sale. That strategy was just, I'm going to keep the loan in place and just start taking over the payments on the loan. Yeah. Okay. More questions? Yeah.
Just curious, follow-up question on that. So with a short sale, if you get it
whatever you want to do. It's your house. So now at the workshop, I'm going to show you there's some that you keep and there's some that you flip. You got to know when to hold them, you got to know when to flip them, right? And that's going to be doing these heat maps I'm going to show you. I'm going to show you exactly where to hold them and exactly where to flip them. So we have a formula for that. And we're going to share that with you at the workshop. Okay, that's some of our secret sauce. Yeah.
Beyond the 3-day workshop, how often do you have REIA meetings for members? And what
So we meet every minute of every day. Most people just do everything online. You know, when we went to COVID, we went online. And we do have certain training and other kinds of events, but we do every minute of every day online. If you go to flipping.com, there's a whole calendar of events that are both live and online.
Okay.
Yeah.
So flipping.com is basically synonymous with
Is what?
is basically synonymous with Texas REIA.
Yeah, Texas REIAs and flipping.com are sister companies, correct. So yeah, but you can go to texasreas.com and you'll also see our event calendar on there. So yeah. More questions? What's that? Land. I love land. Land is the highest appreciating real estate there is. Because it's the appreciating part of the real estate, not the depreciating part of the real estate. So we love land. The problem with land is it doesn't generate any income. So we call it the alligator. You got to be careful how you finance it, right? Because if you ever got a mortgage on land, then you're paying, you know, a mortgage payment on something that doesn't generate any offsetting income. So that can bite you. And land is also something that becomes very illiquid when the market goes down, right? So the trick with land is to own a lot of it and hold it between market cycles. But do you have any questions on land? We love land. Texas has a lot of land. What kind of land are you interested in? Yeah. So you can buy inner city properties, highly appreciating, and develop them. In Texas, there's a lot of land out there. You buy these 100-acre tracts and you break them up into ranchettes. We do a lot of that, where you break them into like 10-acre ranchettes. That's very popular. But or you look at the highest and best use of the land. We do a lot of commercial deals. We do storage. Storage is super hot. Been totally revolutionized now. It used to be when you had a storage facility, you had to have a guy watching it. Now you have an app and a bunch of phones, security cameras watching it. So it's totally automated. And sometimes you can take land, turning it into RV park, mobile home park, storage facility, whatever. So a lot of things you can do. You just have to look at the highest and best use of the land. Yeah. Question?
I have a story, but kind of a question inside of it. I'm from Ohio.
All right.
And I came out and bought 3 acres out in a rural area.
All right.
Built on it.
Okay.
Built a custom house. No comps in the area. Can't get rid of that.
Red flag. Yeah, I mean, if somebody says there's no comps, I don't want to do it, right? I mean, what you're saying is you're trying to sell something nobody else has sold before, which means there may not even be a market for it. So when you go to sell that, you know, if there's no comps, that's a red flag. So don't build something where, you know, I want to copy, I don't want to be original. So don't be original. But you're saying you now have some property out in the sticks and you need to sell it. How do you sell it? Okay, I'll tell you how you sell it. You're not going to like it, but it's the only way. Seller financing. You're going to have to provide the financing. Do you have a mortgage? No. You own it free and clear. Yep. I mean, you know, get a mortgage and then wrap the mortgage.
Nobody will finance it.
Oh, yeah. You can't get a loan? A bank loan? Why can't you get a bank loan?
Private money, they will, but they...
Why can't you get a bank loan? Banks will do rural property.
No, these ones that I've been going to, it's like, no. And if it is, it's way less than what the house is worth.
Well, it doesn't matter what the house is worth. I mean, it is what it is. But here's what I'm going to tell you. The way out of your problem is going to be seller financing. If you sell a house and you provide financing, it will sell for 10, 20, 30% more than the appraised value. And it will sell much faster. When you sell a house in the MLS, there's 4 months of inventory, right? You know, when you sell a house with seller financing, buyers outnumber sellers 14-1, right? You're trying to sell something where the seller, you, outnumber the buyer 100-1. if you offer it with financing, you are outnumbered by the buyer 14 to 1. There's just not many properties. It's the same trick with mobile homes out in the country, anything out in the country, right? The way you get rid of them is with seller financing. So you're going to have to say, instead of you can buy this house for $300,000 or whatever the price is, you can buy it for $50,000 down and X dollars a month. Now, the reason I'm going to tell you go get a mortgage, you're not going to convince me you can't get a mortgage. So it doesn't matter. Let's say you think it's worth 300 and the bank says no, it's only worth 200. So get a mortgage for 150. So at least you get 150,000 of your money out of it. Get as much money as you can out first, and then sell it with seller financing, where you take the mortgage and you wrap it with a new mortgage. So that way you'll get as much of your capital as you can. But when you sell a house with seller financing, it'll sell faster, it'll sell for a premium price, and it'll even sell at a premium interest rates. You know, right now interest rates are, 6.5%. If you sell something with owner financing, you can sell it easily with 9% mortgage, right? So it'll sell premium fast and thing. So is it multiple houses on a couple lots, or what do you got?
That was the plan, but no, I changed my mind. I started coming towards the city.
Well, I would never build houses where there's no comp, so sorry. But come to the workshop, I'll show you how to make some great money doing something else. So, and that is the solution to your problem. Yeah, I mean, it sucks.
No, it makes sense.
Yeah, well, it does make sense, but I get it. You just want to sell them and go on, but I'll tell you, get the biggest mortgage you can, get as much money as you can out, and then wrap and seller finance. That's how you get out of it, right? Any other questions? Yeah.
When you were referring to land earlier, I was wondering, is it as easy to flip it?
Flip what?
Flip land.
Flip land? You can flip anything. If you get a property under contract, you can do whatever you want. You can buy it or you can flip it. You can even flip it before you buy it. You can sell your contract. Now, I will tell you, land is one of the less liquid types of real estate. So it's a little harder to sell. When the market's hot, land is hot. When the market's cold, land is the first thing to go down. Right now, the market's kind of in the middle. Now, I love this market. And the reason is sometimes it's easy to buy and hard to sell. Sometimes it's easy to sell, hard to buy. It's never easy to buy and easy to sell. But in this market, it's not that hard to buy. It's not that hard to sell. So it's a great time. Interest rates are normal. Everything's good, right, in this market. But, do you want to specifically flip land?
No, just like for information. When you were trying to compare, or looking at the wholesale,
Okay.
just trying to compare.
There's nothing wrong with flipping land, but I wouldn't go out there and say, I'm going to flip land. I'm going to do deals. Houses, land, build, flip, fix and flip, wraps, seller financing, equity partnering. I love them all. So mostly your job is to find deals and then use whatever strategy solves the problem. We got a lot of strategies, right? So I wouldn't limit myself to land. Why not do them all? Yeah. Okay. Any other questions? You guys learn a lot today? Yeah? I wear you down? You got another question? I like this, so what's that?
Do you do any type of mentoring?
Mentoring? I do, but I tell everybody, get some free training, okay? Figure out what you want to do, because everybody here is going to be a little different. Some of you guys want to do full-time, part-time, active, passive, commercial, residential, whatever. Get some free training, figure out what you want to do, and then if you'd like more help with, okay, when you know exactly what you want to do, then say, what do you have for this, whatever this is? And I just tell everybody it's better before you ask for help to know exactly what you want help to do. Because a lot of people say, I need a mentor. It's like, to do what, right? Well, I'm not sure. Well, let's work on that part first, okay? You have another question?
How do you feel about
SCR?
STR, short-term rentals?
Oh, well, yeah, they're cold. Everybody jumped on the Airbnb thing, short-term rental thing, and right now, if you look, prices are way down. The rents are way down. It was the hottest thing ever, and then a bunch of inventory got dumped on the market, and prices have kind of collapsed. You can do it, right? I've owned a number of them. I've got a little bit of a sour taste in my mouth. I had one in Fort Worth, and the city changed the ordinance, and it became illegal. So I had to sell the damn thing after furnishing the whole thing. It was like, oh man. And then I had another one in Austin. The city did the same thing to me there. So the city can change the law on you, and all of a sudden you're stuck with something like a fully furnished house you can't rent, right? So I got screwed twice, and I'm like, do I really want to do that? And then prices came way down. So I mean, there's nothing wrong with it. And, what's that? What do you mean? Get a rent-to-rent. Okay, so you get a rent and then you turn the rental property into a short-term property. If you can make the numbers work, I mean, you know, it's arbitrage. Yeah, I mean, then you don't have to own it, I guess. Make sure whoever you rent it from knows that you're going to do that with it. You do have to furnish it either way, which is expensive. So you're going to have to put $25,000 for furnishing into the thing. You got to market it. You got to have good reviews. I mean, it's a little bit of work, but you know, there is money to be made, right? What about apartments? We buy apartment buildings.
No, the apartment, you rent it and you rent to own them. And it's apartments that partner with STR companies.
So, like an apartment building, you rent an apartment building and turn it into a short-term rental.
Correct.
Okay. Yeah.
Well, I'm doing it out here in the luxury area.
Yeah. I mean, we've got one of those in Houston by the medical district, and we own an apartment building there. We're turning some of the rental units in the apartment building into short-term rentals. So, yeah. I mean, it's a question of supply and demand, right? I mean, is it in a place where, you know, people want to rent those things? But the biggest problem with short-term rentals is just, if you look at the price over the last 5 years, they've really come down because the supply has gone way up. It was the hottest thing a few years ago, and now it's just not as hot because so many people are doing it, right? So you have that and the regulation thing, and you know. But yeah, there's definitely money to be made. So if you're gonna do apartments, though, buy the whole building. What's that?
I'll get there. I'm not there yet.
Why not? What's that? You don't need any money. I mean, are you worried about the money?
I have I have 400,000 sitting in one house.
Okay.
I have 100,000
Yeah.
of land sitting in, I'm all over the place.
You don't need any money to buy apartment buildings. You know that, right?
I'm sure you don't, but I don't know the way to do it.
All right. We teach that too. Yeah. People just think you need money to be a real estate investor. It's like they think you need money to be a bank. Banks don't have any money. You know that, right? When you go to borrow money at the bank, whose money are they loaning you? My money. I give them my money and then they give it to you and they get the interest. It's like there's no, you know, that's how it all works. Nobody that invests in real estate that's really doing it is using their own money. So.